Today, Powell could be setting up for a pullback, maybe not a rate cut coming, or is this a head fake? You guys don't want to miss it. My name is Paul Barron. Welcome back to the show. I want to thank our sponsor today, and that is Coinbase. This is where you guys can get into crypto, start your journey. And the cool thing with this is you can actually get some money back. And that is if you join right now and start buying some crypto over there on Coinbase, you can get up to $200 in crypto just to get started. So use our link down below. It's going to help you guys get moving as the markets are in a little bit of a dip. I'll get into the charts in a second, but I want to go over to a few points here. Obviously, the Jackson Hole event is where everybody is watching right now, everybody looking at kind of this balancing act that we're dealing with right now with Chair Powell and what he is going to do. There are many factors that play into this. A couple of points I want to get to is this right here, that we could see some unemployment continue to rise. And remember that unemployment jobs are often lagging data points. And this is what the Fed is unfortunately dealing with, is lagging data points. It's what's happened in the past versus what's going to happen in the future. This is a big issue right now. So this is now, this particular share has doubled over the last 7 months. This, of course, indicates that we could see unemployments exceeding 5%. That would be significant if we saw a 5% unemployment. And it would be a immediate catalyst, but again, it would, by that time, it would be too late for a rate cut, because at that point we are dealing with major job loss, major market downturn, and also a big issue on small business if we saw those kind of numbers. Now, the Fed, of course, is looking at it right now because some people are pointing at it and saying, hey, maybe he's not going to go dovish in Jackson Hole. And if he does not, that could be a problem for Wall Street. In fact, it could wreck the markets going forward, especially if people are saying, well, you know, we've started to see performance coming out of Wall Street with a lot of earnings over the last couple of weeks, a lot of the restaurant chains, a lot of the retailers starting to play into it. The big one, though, to watch, of course, is Walmart. They, of course, along with Lowe's, will be reporting this week. In fact, right before, I think, Powell's speech, a couple of points you got to look at is that they're set to do the report. The point is that this is all performance of what they have done over the past quarter. What you've got to pay attention to is how do they look forward? And this is a critical point right now. If there is any concern in these executives, because listen, Fed rate cut is already been, or the Fed holding has already been in place for quite some time. So the performance of these companies has been based on that. Once we start to see an outlook along with what we're seeing in the jobs market that says, hey, things are not so rosy, we actually see a problem here. That, I think, is when Powell starts to pivot a little bit. I want to go to a clip real quick because this will get into what is going to be most important about Jackson Hole. Take a look.
I mean, whether the flow through of inflation from tariffs is 20%, 40, 60, or 80 is really beside the point. I mean, I do think there's going to be a point, maybe a 1.5 bump in the CPI. It's going to be a one-time, but that doesn't mean the Fed should tighten for that. You were talking about how important this meeting is on Jackson Hole. This is by far Jay Powell's most important talk at Jackson Hole. And in my opinion, if he just says, oh, we're going to wait and see, we have data on both sides, I think the market's going to take it very badly.
I'm in agreement with that, but I will argue the point that hopefully Powell is looking at, and this is the issue, as I've reiterated, is jobs and the forward-looking statements from some of the big retailers. Because we're going into a holiday season, likelihood is you're not going to recover from that if we do see some more hawkish opinions right now. If you look at the decision for September, it's still a quarter point, holding at around 72%, but it is down from what we were at just here recently on the quarter point, and that is, let me kind of zoom in on that for you guys, at 80%. Now we're hovering right around 71%, this over on Poly Market, in terms of a potential rate cut in September. And if we get 1 quarter point in September, likelihood is I think that starts to create a domino effect over the next few Fed meetings, which will mean additional rate cuts. I want to go to another clip real quick because this will get into expectations and what to look for as we go into the Sol conference. Take a look.
To your point, when you look at the Fed funds futures, we're pricing in about an 85% chance of a Fed rate cut in September. So the market wants to see a little bit of an inclination. Listen, I think he's still going to kind of hold things somewhat tight because we do have two inflation reports, and probably the most important report in my mind is the September 5th employment report to see if the revisions that we saw were maybe somewhat overdone. But to your point, I think expectations are somewhat high, and you could get a little bit of a setback. But all in all, I don't think that's going to disrupt the underlying trend for the market, which is still higher. What I think could happen is really what you're seeing in like the small caps, the home builders, they're really banking on on that cut. So that's where I think you'll see more of the action.
So if he were to kind of indicate that a 50 basis point cut in September is off the table, maybe something like 25, and then reserve optionality for October and December, how do you think stocks would react to something like that?
I think the market would act well to that. Again, I don't know that he's going to come out and really say that we're going to get the cut. But again, we're looking for a little bit more of a dovish language, a little bit of a hint that the balance between inflation and employment has changed. To let them at least have an insurance cut in September. And I think if he does do that, then maybe you'll see a little bit more of this rotation that we've seen the last few weeks continue.
All right, so there's still a lot of bullishness in the market. BlackRock came out and said, we think it's the best environment ever. Look at what they had to say.
And by the way, it doesn't mean necessarily everything's going up. But there's a couple of things at play that are pretty extraordinary. First of all, as you take the equity side, first of all, the technicals and equities are crazy. I know we've talked about it before. Amount of cash on the sideline, the amount of buybacks relative to the IPO calendar, i.e. the demand versus supply, is pretty extraordinary. And these companies, we've talked about on the show, the multiple is not that attractive. These companies are throwing off the earnings growth. So I looked at 2024. If you strip out Tesla for obvious reasons, Mag 7 year-on-year growth is like 54%. You get through multiple pretty quickly when you're growing that fast. Then you take the other side of it is you've got an income, in fixed income, you're getting yield levels. Listen, I think the Fed can cut rates, but until then, you got yield levels. You can create portfolio 6.5%, 7% yield. That's pretty good.
And the Fed's going to cut in September?
Listen, I think they can cut. I think it's almost a given that they cut. And, particularly if you got a payroll report that shows what has heretofore happened, you're seeing some sogginess around job hires, around job openings, that I think the Fed's you've got more slack coming into the labor market. But you see where the technicals are, where the amount of cash, we were looking at it, the amount of money that's gone into money market funds, including last week, is extraordinary. Some of that is going to move into equities and other fixed income and other assets.
All right, so you can see right now Wall Street very, very bullish. There are some other things in the market that may potentially continue to push this way. One, of course, is what's happening in Ukraine. And President Trump issues a statement right now, just hours before this. He's basically set to meet with Zelensky over there. And it looks like there's some sort of potential agreement coming, even though there is a lot of pushback from Zelensky on yielding some land and yielding some territory. But I think this is something that possibly could get into some positive elements. I know when they came out of the Alaska meeting with Putin, the big issue was that they got into Article 5 quite a bit in the sense that they were securing NATO, and also that is a very positive thing for the EU, which could also play into these negotiations to hopefully get to peace. Other things that we're dealing with right now, speculators have now built the largest leveraged ETH short position in history. This could backfire heavily if ETH starts to turn. Now, there are other things that are happening in the market that may indicate Ethereum could get a spin here. And there are some things that I think you need to pay attention to. One of the reasons, if you look at Japan approving their first yen-pegged stablecoin, this is going to be, it's called JPYC. This is going to be launching on both Avalanche, Polygon, and also Ethereum. That, again, more push to Ethereum. And you've got, of course, the Trumps out there buying the dips. And this is Eric Trump going in. And I'll show you something that's kind of interesting around that. This is Tom Lee saying, we think we still see a $15,000 ETH by December. Now, this is the number one investor on Wall Street right now. His capacity and his ability to call what happened with Bitcoin during a time when a lot of people were saying Bitcoin was not the game, and he was able to perform on that, is pretty significant. The fact that he's going with Ethereum as such a strong asset play. Now, granted, he's got a lot of dogs in the hunt there in the sense of BMNR, which is an ETH treasury company. But the other thing that you got to look at is Trump's Ethereum exposure continuing to rise. His crypto portfolio now 92% based on ETH. So what does Trump know? What does the digital asset arm of the Trump nation know around Ethereum and how is this going to play out. If you look at the charts real quick, Bitcoin sliding off that high right there at around 123, has retraced back down here to as low as 114. Negative sentiment right now going in general. Ethereum kind of in the same position, but not falling back quite as much. And what's interesting about ETH is that we're starting to see a little bit of positive sentiment brewing. So that's something that I'm watching right now. Could this spin around and see Ethereum start to trace back above the $4,400 mark? We're going to be watching very closely. We'll also come to you guys with the Powell event later this week. Make sure if you're not in the Diamond Circle, get in on that right now. It's going to get you additional content from us. But best of all, it keeps you updated. And it's free. It's absolutely free. All you have to do is click the link down below. Follow me out there on X, @Paul Barron. We'll catch you next time right here on The Paul Barron Show.